Hello and welcome to our March newsletter. We'll start with a quick update on activity, and then I want to spend most of the time on a new development on the financing side that buyers should be aware of, especially those buyers looking at manufacturing. So far this year, we've closed 8 deals, including our most recent transaction in the MSP and technology space, and we currently have 19 deals under LOI. From a sourcing standpoint, last month we generated 283 introductions, had 128 calls and meetings, and submitted 34 offers, which is up 120% from last month. So overall, strong activity across the board. But beyond the numbers, there's been a new announcement that could meaningfully impact how certain deals get financed. The SBA recently announced a new program called the Made in America Loan Guarantee. The headline is simple. For select loans, the SBA will now guarantee 90% of the loan compared to the typical 75% under the standard 7A program. That's a meaningful increase, and it directly reduces risk for lenders. This applies primarily to manufacturers, NAICS codes 31 through 33, and importantly, it includes acquisitions. The financing can be used for, again, acquisitions, equipment purchases, facility upgrades, inventory expansion, supply chain reshoring, and on top of that, there's already a strong set of incentives in place this year. 0% upfront fees on certain SBA 7A loans, 0% fees on 504 loans, those are more related to real estate, and additional working capital availability through the MARC program. So when you put it all together, financing for manufacturing deals just became even more attractive. At a practical level, this doesn't change what makes a good deal, but it does change how deals can get done. With a higher guarantee, banks are more comfortable lending and may be more aggressive, deal structures become more flexible, and while this is likely to lead to more deals getting done, it can also drive higher valuations. It's a meaningful shift in how manufacturing acquisitions can be financed. One other point worth calling out, this program has also been expanded to include certain food supply chain businesses, particularly those tied to US-based production, processing, and logistics. Not every food-related business will qualify, but it does mean that a broader group of companies tied to domestic supply chains may now be eligible for those same financing benefits. There's also a proposal that's already passed the House that would increase SBA loan limits for manufacturers from $5 million to $10 million. That's not law yet, but if it passes, it would expand the size of deals that can be financed through the SBA, effectively doubling it. Prior to these financing improvements for manufacturers, we've already been seeing a steady increase this year in interest in manufacturing, particularly in areas like aerospace and defense. And there are a few reasons for that. There's been a broader push toward onshoring and domestic production. There's continued political focus on strengthening US manufacturing and overall global instability, including ongoing war and conflict, which is increasing demand in sectors tied to defense and infrastructure. This financing change is reinforcing a trend that's already been building, promoting US manufacturing with the catalyst of war and the growing desire for self-sufficiency. Hopefully this is a boon for years to come. Overall, the takeaway is pretty straightforward. Most buyers focus on finding the right business. The better buyers also pay attention to how the financing environment is evolving, and they adjust accordingly. We're seeing real movement in manufacturing right now. If you're already focused there, or even considering it, this is something worth paying attention to. And if you're thinking about starting or refining a search, we'd be happy to talk.